Yo, what's up everyone? Trading can be tough, I know. And if you are still facing big challenges in your forex journey, make sure to watch this video right now to the end, take notes, rewatch it 10 times if you want, because I'm gonna show you right now a trade what I took this week with a nice 1 to 8 RR take profit target. And before even this trade happened, I shared it in our Discord community. Here you can see that was my analysis before it happened. This here is my checklist, and now I'm gonna break down for you guys why I executed these nice long positions on gold to take it up to these levels as you see. Before I go to my executed longs at this level here, let's check what was gold doing all the time. So let's start from weekly time frame, and we can see we're definitely bullish, right? So we have an higher high, we have a higher low, and then break a structure to the upside, next higher high. So on weekly there is not much to see. So let's jump back to the daily time frame, because you need to understand the market is bullish. So the trend is your friend, right? And we are following the daily time frame trend. So I'm not expecting the market to fill these inefficiencies right now because of no reason, you know? So it's just we have a simple rule-based trading. So if my daily is bullish, I'm executing longs in discounted levels. Simple as that. So, and here, this price action down here is not important for me because I'm moving with the actual price action because I'm eventually actually trading, okay? So I need the actual price action to execute trades. So let me just mark up my last structure levels here. This was my previous high, which got broken from this low. So we have automatically our Fibonacci tool to see the discounted levels for continuation longs. So we can see it roughly at 71. We have this demand block here before the expansion, and one demand with imbalance we have down at 79 on the daily time frame. So now let's jump to 4 hour to identify structure points much better. What I mean by that is the most important part in trading is to understand external and internal structure. So external is my swing structure, internal is my substructure. So you can see from this low to this high, everything which is inside is internal structure, okay? Because we broke this previous higher high from this low, so which means everything inside, every high, every low is internal market structure. So when I saw this higher high was printed, I was only marking up my point of interest in discounted levels. Quick recap of the Fibonacci tool, putting it from the low to the high to measure nice demand levels, and then just wait and execute. Simple as that, right? So after the higher high was printed, we see on a lower time frame we have there a shift to the downside and pulls back and then drops heavily to the downside. So here a lot of traders are afraid of taking any long trades because it's pushing down like crazy, and that's what I'm always saying, like higher time frame is king. And if you understand supply and demand in combination of external levels, it's powerful, okay? So on 4 hour there is not much to see, right? Internally you can see we have high, higher low, higher high. So and then once the market drops down, we take out one level here, pulls back, and then creates another lower low exactly into our demand level. So to make it more detailed, let's jump to 1 hour. So on 1 hour you can see we have this demand level, and if you're familiar with liquidity, it's some sort of liquidity, right? So but if I'm too focused only looking at liquidity, then I will have 0 trades. Why is that? Because liquidity is everywhere. So you can see we have liquidity resting here, we have liquidity resting here. So and then if I'm only looking for shorts, I'm targeting the liquidity, right? So what I'm always doing is, because I know trading is a probability game, okay, with my strategy, what I backtested a lot with the higher time frame external lags and the lower time frame entries, I have a crazy win rate with that. So that's why I'm following these steps and always continuing doing the same things over and over again. So it is a probability game, which means I'm increasing my probability, I'm increasing my odds with having this strategy, right? So jump back to this area again. Once the market came down, let's look at it closely, okay? So let's zoom in a little bit. We can see we break this low here, stop, make a pause, push up, and then print a new low. But then what happened here? So we are eliminating this high here, and even this continuation pattern was taking. So when I saw this, I knew what I wanted to do, okay? Now it was just waiting time, marking up your supply and demand levels. In this case, it's a demand level because we want to long it, taking my Fibonacci from the low to the high to see discounted price levels, and I had this consolidation block before the expansion as my demand level where I put my buy limit. So, and one thing to add here is you can see see, before we came to my buy limit, we had a build up in liquidity up here. And this was even a sign for me to take this whole liquidity pool out of the market. External, we are bullish. We had a minor shift to the upside. It's not the best one, okay? It's a minor shift because we don't have like this nice pullback high like here, and then to the downside, and then shift to the upside. We have a slight one here, and then print a new low, and then internal high, okay? So following with the external structure, what I have in my mind that my daily is bullish, we pulled back to discounted price. So I have a lot of confidence, even fundamentally, with everything what is going on in the Middle Eastern. So I have a lot of confidence to take longs and not any shorts. So, and when it comes to execution, there are some different tools. That's why watch our entry types video here on YouTube, then you will understand how we execute trades like that. So once I went into this trade, I was just monitoring price. So what I mean by that is this trade management, okay? So when I'm triggering, I'm not just letting it go and then go somewhere. I'm just putting my alerts, okay? I'm putting alarms at these potential levels of takeout of liquidity to see if demand gets squeezed, okay? So we can see demand was created here. It was respected. Built some inefficiency, was continuing to the upside. A slight pushback down, nothing significant happened. Boom, straight TP. This is a 1 to 8 RR on a 1 hour time frame. So there is no 5 minute, 1 minute, and this on this chart, this is only on 1 hour, but the top down analysis from the higher time frame. And when it comes to trade management with trailing stop loss, I know a lot of people have issues to move stops or when to move stops. It's like, keep this one thing in mind. If you have an entry and there is no reason for the market to test back your entry point, okay, then you go break even. Because if there is no liquidity resting, if there is no like inefficiency, demand not filled yet, and you created demand at your entry, then you can't go break even. Because why? The market is moving. Okay, let's say you entered down here on the bullish leg. So then it's coming, okay, now make it like this, makes much more sense. Somewhere here you entered, right? And if this high is broken and my only next potential imbalance demand level is here, so I can't go break even because this should be normally the next potential expansion, right? So, and this is when it comes to moving break even. If the market has no reason to come back to your level, I'm going break even. You can set percentage rules. If I'm up to RR, I'm going break even, or some stuff like that. So it's really personal. So you can create your own plan, own management plan. What I do is, if the market has no reason to test back this level here, I'm going break even, okay? And here with TP, the same. I don't set TPs, I trail my stop and I manually exit. So what I mean by that is, if there is no reason for me, if I can't see any shift to the downside, I'm not taking my first TP as my full TP, okay? So I extend my TP or my manual exit to this supply level here. So why I should exit my trade here if I have 2 or more potential take profit levels. So this is from a really very important, and you can see full TP is a 1 to 14. So I'm expecting personally a new all-time high on gold, which all the things what is going on right now fundamentally, and even nice structure on this chart. What I see, very nice bullish momentum, but I exited on one account fully because tomorrow is NFP and I'm not going to trade NFP, so I'm not executing on these type of news. So the volatility is up and down, so I'm not going to gamble around. So what I do is I execute my trades before, or if I have positions before these kind of news, I move to break even. So that's my personal view, how I do that. And you can see if you're trading prop firms or your personal account, doesn't matter. This trade is a 1 to 14. The first TP is a 1 to 8. So imagine that it's on 1 hour, not going to lower time frames, on 1 hour past challenge. Okay, so 1 hour time frame can pass challenges too. I know there's a myth going around that you need to trade every day to make money or stuff like that. So for me, it's proven that's a myth. That's not correct. You can trade lower time frames, high time frames, doesn't matter, but you don't need to trade every day. So have your quality setups, wait for them, and then execute. Because here it's not like you're only focusing on, I will make this RR if I go in like here, move my SL a little bit higher because I want this big RR. That's biggest issue. What I saw on a lot of people, what I can tell you is when I enter a trade, I'm accepting the risk. I'm saying like, okay, if this one goes against me, I will lose 2%, for example. I'm not like satisfied first, like putting my long tool at the top and I'm like, wow, if this hits this, I'm gonna be like 20% in profit or stuff like that. No, when I go in, I'm like, okay, I'm risking 2% and the outcome is random. Okay, that is just a bonus. And if the market gives us the opportunity to go break even as soon as possible, just do it, because like I said, it's a probability game. Understand how the market moves. There is no 100% win rate. I know a lot of stuff going around with, yeah, I know how to trade algos and stuff like that. Okay, pretty fine, just do it. I'm following my simple rules and I'm very satisfied with it. My results are speaking for myself, and even our students are executing trades like that. So make sure to subscribe our YouTube channel, hit the bell button to get notifications, and down below we have linked our Discord channel. So if you want, jump in to get more valuable stuff behind the scenes, not just only on YouTube. And give us a like, comment if you want. And thanks for watching. Hope this video helps you to grow your trading to the next level, and see you in the next one. Ciao.